Okay, good morning and welcome, you amazing human beings, guys. Welcome to Pounds for Breakfast. As always, I'm your host, Dane from the Must. I trust everybody can hear me, everybody can see me loud and clear, right? Let me know in the comments if you guys, everything is good on your side. Just a massive shout out to ATR Quinton, first one jumping into the chat and giving us a massive welcome. Andy, Joseph, let's see here. We have Tristan, we have Tomelo, Alvin 4C, Waylon, Colin, Gilbert, Stacy L, let's see, Melisi, let's see, Simons, Chris H, Mark Hooper, Garrett Van Page, Ruan, welcome. If you guys are in your GBP USD buys, you should be smiling. I reopened a slightly more aggressive lot size. I'm in a 20 lot buy there, and it's absolutely thumping, absolutely killing it. So if you guys are there, maybe consider taking some of those profits. But we are in a really good buy position. If you caught from the move there, even though it's only a 30 pip move with FX, you can obviously go bigger from a lot size and volume perspective. So if you're in that one, you should be doing well. Okay, beautiful. Ariel is asking, can we join the Signal group? So we are releasing a system that will email trade opportunities to clients as and when it happens. But if you'd like to join the Telegram group where we advertise and give out the shows, that link is the second link down in the description below. So first and foremost, guys, we are going to start off with the news, what's happening in the world, what's happening in the markets. We just wrapped up what we're going to be doing in the future for $100 plus accounts, and that is going to be trading some of these fundamental data events. I'm in the mood to trade this week. I'm in the mood to kill it with every single one of you. And I found another fundamental data point that I haven't added onto the calendar, but we are going to get some GDP data coming in for the euro that I might want to consider trading this afternoon as well. So for those of you who have your live accounts, I will be also considering going live at 12 o'clock. I'll confirm with you guys after the show. There's a few back-to-back meetings that I'm going to try and see if I can shift around. But ultimately, we're going to try and see if we can trade that Euro GBP data as well in a live session just before 12 o'clock. Looking at taking advantage of the euro, looking at that weaker dollar. If we get a stronger euro, weaker dollar combo, we could see quite a bit of news and movement within the market. So this morning, we are going to start off with the news. We're going to jump into what is happening in the world, what's happening in the markets, and try and make sense of the chaos, right? That's the value proposition of what we do here, is all of these external data points and how do we wrap that up into a trade specific opportunity. If you're brand new here, as always, you know the drill. Well, you don't know the drill because you're not here, but for the rest of you, you guys know the drill. You can always welcome our brand new members. Always remember to hit that like button, hit the subscribe button. If you're brand new here, that means you'll never miss a public broadcast. Any of the free broadcasts will pop up for you. But if you obviously are a Globex 360 client, more than $100 in your account, all of those events are obviously private. So you can jump into those and those are unlisted. So go ahead, you know exactly what to do. So this morning, we're going to jump in. We're going to have a look at the news. We're going to have a look at what is happening in the markets. And we're going to see how we're going to end up doing things today. So we're going to share first and foremost, we're going to start off on the local front, and SAA, as well as all of our other state parastatals, are going to continue to dominate headlines, whether it be Eskom, whether it be Transnet, whether it be SAA. This is kind of the flavor of what we've started to become pretty normalized to. And in any event, in any other country, this would be absurd, right? For all these massively funded government-owned institutions to constantly be in headlines, teetering on this bankruptcy kind of edge. So obviously that's nothing new for us, nothing really more that I'm seeing that is noteworthy that we do need to discuss there. We're moving into US news. I think the one item that is definitely of much concern to both the future and the state of markets, but also just in general, fairly worrying for the future of a new technology, is going to be, FTX and its collapse, right? And Kathy Wood from ARK's Investment has said, this can really delay crypto adoption by years, right? ARK's collapse, and for those of you who don't know the full story, ARK is one of two of the biggest exchanges in the world from a crypto perspective, right? They were into some liquidation issues. They were considering or being considered to be bought out by the first or the other larger competitor in terms of the crypto exchanges. But once they dug into it, they figured out that they've essentially mismanaged client funds, right? The gentleman who's the CEO of ARK, FTX, essentially lent a lot of customer funds to his other company that he started. And that was essentially a quant trading firm. and essentially traded with client funds, right? Expecting to ideally, hopefully giving them some sort of return, but in these uncertain markets, right, that's just not doable. They were offering 8% on client accounts deposited either in coins or in fiat currency, right? This ultimately led to the crash of FTX, and SBF, who we call Sam Bankman-Fried, has pretty much wiped out all of his personal wealth, right? He's wiped out billions for both himself and the rest of the world and all markets. So this is obviously going to be a big one. I think it's going to have a massive ripple effect. So we're going to see a lot of regulation coming in the coming weeks, if not months. And this is essentially what, big institutions are waiting for, right? To regulate crypto. They needed one of these bigger shooting stars to fall so that they could point a finger and say, exactly, you see, this is why, blockchain and crypto is unsafe, right? So unfortunately, this is obviously huge. It's obviously extremely damaging to the industry as a whole. We also received news that Amazon is going to lay off 10,000 workers. Now, this follows in the footsteps of the trend of Meta that put off about 11,000 workers last week. And it's not a good time to be in big tech, right? So we need to start looking at the S&P 500. We need to start looking at the US 30. Specifically, we need to start looking at the NASDAQ, otherwise known as the US 100, a little more conservatively, right? We're seeing big tech lay off in a very big way. And this can be seen in two approaches. We need to understand this. Big investors and shareholders of these firms, right? If you were an investor of a company, right, that had way too much workers, way too much expenses, right, and that company ends up laying off a ton of workers, tightening up on expenses, tightening up on efficiencies, as an investor of that company, that would be ideal for you, right? It means that less of your potential profit is being consumed in overhead expenses. So we need to look at this from both lenses. From the rest of the world, we look at these companies like, oh no, they're laying off workers. But we need to also start looking at the fact they're preparing for what has not yet happened. Companies like this have extremely sophisticated teams of, market analysts and really some of the best brains in the industry to forecast what the market's going to be like, what is consumer spending going to be like. And if they predict that is going to slow down, they don't wait, right, to have a bad year and a bad quarter before making decisions. A lot of the times when they have a bad quarter, they're expecting to burn cash in that bad quarter. But if they're expecting something bad is coming, right, if economic uncertainty is going to take a headline for the day or for the week or for the month or for the year or for the next 2 years, they will make these kind of decisions to stay ahead of the game. So you need to just shift your mind in terms of thinking. If you hear a normal company lays off workers, you think, oh no, the company's going to close. Bigger companies like this that invested billions, if not trillions, into their businesses and exercises, when they lay off these workers, they're essentially preparing for the future. So we need to obviously consider continuing looking at the NASDAQ and how this could potentially affect the markets moving even further. Now, pound sterling, UK jobs is a turning point. The Bank of England can't afford to rest, right? They're essentially looking at the GDP data that we traded off this morning, and they're saying that the jobs market is busy turning, but Bank of England cannot afford to rest, meaning that they can't afford to start slowing down on these interest rates because, again, they're not over the edge of that curve, right? They haven't yet fully done everything to make sure inflation will stop. Unemployment has risen. More people have filed for unemployment, and that is where we're going to obviously look at some of those fundamental data points right now. So let's jump into it. I'm going to start off with some of these fundamental data points, and we're going to have a look at what is currently happening on the S&P 500 heat map first. So looking at the S&P 500 heat map, we can see it's a bit of a mixed bag today, right? Tesla, Amazon, 2.2%. That seems to be the trend here. Microsoft also 2.2%. Apologies, Tesla at negative 2.5%, right? Walmart's down almost 3%, and that seems to be the bloodbath across the board. We're seeing healthcare start to make a little bit of a bounce back from the midterms. They took a massive beating while everything else was in the green, and that generally seems to be the trend for the day. Now, we traded, looking at some of the fundamental data, we traded this GBP data this morning, looking at that unemployment rate rising and the more people filing for unemployment. However, average earnings have come up. Average earnings ex bonus has also come up, and the climate amount change has now actually got a forecast, which we didn't have this morning. I think it was Sherman who obviously helped us out with that reading of a different economic calendar. So that all came out good for the pound. I still see it as generally bad because of the unemployment data, but the day is dominated by the dollar, right? Markets are very, very scared at this point. We're seeing that dollar sell off in a very big way. And again, the markets are going to be primarily dominated by the dollar. Looking up next in terms of what is coming, I am going to be looking at trading this Euro GDP announcement, right? This afternoon, GDP year on year for Q3, as well as quarter on quarter for Q3. And that's going to be coming out at 12 o'clock today. So I will be sending a link for another show. I'm in the mood to trade this week. I'm in the mood to get things moving. So I will be sending a link. We will be emailing out a link to you for this event. I will be putting it in the group, but not the link specifically. You're going to get a link for 3 shows that are still to come up. We're going to be trading the Euro GDP, apologies, and we're going to be trading the US PPI, which I'll show you in a second, and then we're going to be trading New York Stock Exchange a little bit later this afternoon. So these are all parts and parcels of what we're trying to do and transition into a full 24/7 broadcast, right? We are currently training and hiring presenters, analysts to do a lot of the work, and we will get there. We will eventually be the #1 place to be when it comes to streaming. Okay, so again, this afternoon, 3:30, we're going to start with that PPI data. As always, we've got that split between core and normal, and these are going to be the items that I think are going to have the most volatility today. And then we will obviously look at the New York Stock Exchange and how that reacts to the markets, and we will obviously trade that accordingly, depending on what it is we end up seeing there. So we have still quite a bit that we need to do this today. Again, things are going to be quite busy from a trading perspective. So no matter where in the world you are, there's never been a better time to be a trader, right? Just being a trader is the time, but to be a Globex 360 trader, it's a no-brain consideration, right? It should be, and undoubtedly, the only place you should end up being is right here at Globex 360. If you look at the cashback program, if you look at what we're doing from a live broadcast, if you look at the amazing staff that are there to support and assist you, whether it comes to uploading documents, deposits, withdrawals, whatever it may end up being, all the amazing technologies we're about to roll out, as well as the Academy, these are all items that just gives you so many more reasons than anyone else to make sure that you are right here with Globex 360. So if you're sorted, you got your live account, just want to give you a massive shout out. You guys know what it's about. And if you've got your live account, just put your hand up in the chat. Let me know you are sorted and you are ready to make some money this week. Beautiful stuff. So we are going to transition into our analysis section, but looking at the time, we might jump straight into some live trading and then cover some of that analysis towards the end. So I think that's what we're going to do. We're going to jump into some live trading, look at the charts, look at where we are in the markets, and then we will obviously jump into some live trading this morning. Okay, beautiful. So I can see hands up in the air. Good morning, family. Last night was selling US 30. That landed me in beautiful profits. Kagiso, well done. That is absolutely amazing. Chris H, I'll have to leave my job to keep up, lol. Alvin 4C saying, yes, I missed this morning. We need a good dollar data this afternoon because indices is ready to a sell-off. Yeah, absolutely. I think the markets are super sensitive. Any big announcement, right, can tip the scales, and we could see some massive moves in the markets this afternoon. So let's jump into the live trading. Let's see what we have in store. And as always, we're going to start off with the dollar index this morning. So here we have the dollar index, and as we were looking at this morning for that special edition show, we got a level of support that I did not believe would be sufficient to hold the dollar up. And as we saw, we got that massive breakthrough. Now, I still cannot tell, and this is a disclaimer, and I'm being super honest, I still cannot tell what in the market caused the sell-off. I can't see any external news events, any fundamental data release. If you guys see anything or have seen anything, please let me know. Do drop that in the comments. But it just simply seems pure price action has basically let the dollar down here, right? Price action rules at the end of the day, not enough support here, dollar fell, and we're seeing some massive gains in the market from a normal FX perspective, from an indices perspective, and a commodities perspective. So moving into some of the bigger items and what is busy happening, I just want to have a look this morning. We just quickly want to separate what is happening on the charts, and we just really want to get rid of some of these other items, and we just want to have a look at this morning US 30, NASDAQ, and we're going to, as always, just continue with and having our German 30 available to us. We just want to have a look at what are some of these impacts that we are seeing. So we're starting to see those 8 a.m. breakouts, which we got again this morning. 8 a.m. we got that US30 breakout, and this will be part of dollar domination, which I will still get around to teaching every single one of you. These are all minute time frames with the exception of German 30, which I'm also changing to a 1 minute time frame. So on the left and just above me right here, we've got US 30, we have NASDAQ dead center, and then we've got German 30 on the right. So we're seeing that pullback, right? If we have a look at US 30, we're seeing that little bit of a pullback, and it's going to be important to now have a look at. This definitely looks deeper than a 50 fib level pull, and I suspect this is going to be closer to a 61.8. Let's just quickly have a look here. I might need to add a fib level. Let's just add that one there. 78.6. Let's add another one. Okay, and we're already getting that breakout there. I just want to add this quickly. 8.2, 8.2. Yeah, so I've changed my systems completely, so my levels are kind of upside down. Yeah, so it was a 61.8. So we are getting a lot of buy momentum in the markets this morning, and I would like to consider chasing that, right? For the reason being, we are in that dollar index massive sell-off, and I do expect that indices have some volume here to still continue those rises. I just want to also point out that as we talk about, and I think this is important maybe to even teach about as well. So when we talk about a market moving up and a market pulling back, we can see markets impulses top side, correction down to the 61.8. Beautiful price action, great stuff. Another thing we have to consider is every impulse has a reaction. So we can also consider that move as an impulse, and that is a correction. So if we look at what is currently happening, let's say on German 30, one could argue, and this is why, it's important to spend time in the markets. One could argue, yes, that's the impulse and that's the correction there. But what if that is the impulse and this is just correcting? So in that case, we would then, utilize Fibonacci to essentially understand our risk. So if this is just not a correction, if we go past 88.2, it means two things, right? It means that this bull market has continued, we've broken back into structure, and we can continue to the top side. So have a look there. We've got that massive pullback there, and market's starting to push down. This might be the dollar picking up a little bit of value, and we just need to obviously be careful of that. Just going back to US 30, we should see it pushing back down into structure. And what we're going to do this morning is we're simply looking for a break in structure. So if we see US 30 break its previous low or this retracement, right, just have a look at this from a beautiful price action perspective. If we see US 30 make this pullback past the 61.8, right, if this correction goes past, we know the next fib level is going to be the 78.6 lower down, right? Inversely and similarly, if we go back up to the 23.6, right, it means that we are back into structure and US 30 will run towards that top side. So again, as we've discussed, no man's lands, right, or dead zones, this will then form a complete dead zone. This whole area here, until we get a breakout in one of these zones, we won't particularly look at anything this morning, right? So we want to see that breakout, we want to see a directional move. And I just want to have a look at GBP USD. So there's our trades there on GBP USD. And I simply just want to go, because I'm just worried about that dollar strength coming in and taking us out here. I just want to go ahead and secure my trade in case we get that push down. I'm not looking to hold it all too much. My bigger 20 lot trade is there at the bottom. I've taken some profit on the way up when I sent the message into the group. So I'm pretty happy to allow this trade just to do its thing there. If we get that push down, I'm pretty happy to go out at entry on this one. And again, just wait for a better entry if we start to see that. Okay, so GBP USD closed up. We got some profits earlier on. Again, investment grade position. We have lost nothing and we're good something. Yeah, so how do you determine the, Fabian's asking a good question. How do you determine the top and the bottom of your fib levels? So fib levels are always drawn from left to right, from low to high or high to low. So if a market was rising, right, and we can see that market stalls off, right, we would draw Fibonacci from left to right, okay, left to right. If markets were falling, right, and we see then the opposite, so let's just delete that out. So if markets were falling and we start to see that bit of a pullback, if we want to measure where that pullback is going to potentially end or the decent zones around that end, we'd measure from left to right, okay? And I always just take it from the end of the market. So I'll use the end of the wick. But again, you'll also see when drawing Fibonacci, your market structure will line up with that Fibonacci. So if your levels are going through that level, you may want to consider that that might not be legitimate, and you might not be seeing the right levels there. So GBP/USD is giving us a little bit of a sell-off warning or indication there. Just switching back now quickly to indices. Okay, so we might be getting that breakout to the downside. We've got a nice strong candle here. We're getting a little bit of a push. Let's just see here what our price action looks like. I'm pretty happy with those levels. So should we get a push down below the 61.8, I'm pretty happy to chase a sell here. Again, just considering that the dollar is quite weak, it is very possible for that bull markets to come back raging and to essentially cause a little bit of a range here. I do think, let's see here. Dollar is looking extremely weak, and that impulse that we saw. Right, I just want to have a look at another impulse we've seen in the past. Have a look here. Here's a similar type impulse. Markets try to correct. Ultimately, that impulse, is not something the markets can just, control and sort of retrace. So I'm going to make a little bit of a contrarian type trade here. I'm actually going to look at buying it at this 61.8. If I'm honest, if the dollar continues to lose value, then we're going to see that continued impulse to the top side. So there we go. Markets are pushing up. As I place that order, markets are busy pushing up. Beautiful buy there. Let's see if markets can continue that. I'm going to put in here maybe let's see. I'm just going to put in 1,000-point trailing. It's a nice small trade. Let's see. So if markets continue breaking up, the trailing stop will kick in there. Very, very small trailing stop this morning because I'm just looking at scalping the buy. We've got a resistance level, support level below us, and I'm just looking at scalping that buy for a potential breakout and another rally towards the top side. So I'm simply using that level there as my safeguard. I'm not doing resistance or support 2 or support 3. I'm just simply looking at, if I'm wrong, I want to be wrong immediately. If I'm right, great stuff. All right. Just based on this dollar, weakness, we should see a dollar weakness continuation here. And if we do, then obviously that'll fuel an indice rally or continuation there. GBP/USD. If GBP/USD comes back into structure, it may be, something we might want to take in terms of a trade there. I remember I've still got a EUR/USD from our CPI event that is still in massive profit, right? Still currently running in around about $7,000 worth of profit. That's right over there, right? So I'm not too worried about catching a currency to the top side because we've got a hugely deep entry, within a few seconds of that CPI data release that is still now, and at this point in time, running about $450 450 pips in profit. So let's see what US30 has to offer us. Again, I'd like to see a pop through and back into this channel. If we do get that, then we're in the money. My stop loss is already into profit. I'm only using 1,000 point stop loss, which is 100 pips. So really nothing much. And it is very likely I could get this trade closed prematurely in profit. But that's the reality of things. I'll drag my stop loss just to entry once more. But if markets push up, it's going to pull my stop loss with it. And this just keeps me in a position that I'm not risking anything on this trade, right? So the second your stop loss is covering you, you're good to go. But again, a little bit of a range here. So anything could potentially happen. We just want to continue watching that one. Having a look at NASDAQ, let's quickly have a look at what is currently happening on NASDAQ. Right, we're seeing a similar thing. We're seeing that little bit of a pullback. We're seeing that market impulse. We're seeing that correction. Also just past the 61.8. But there might be a little bit more market structure on NASDAQ to give us some sort of indication as to what's going on. And I would estimate that to be in this region. Right, so we can use those wicks as a sense of where that market may push up. So depending how good your guys' quality is, if you're watching in 1080p, you should see this quite clearly. But for NASDAQ, I think the trigger is going to be above this next fib level. And this is what I mean about drawing fib levels. You want to make sure that when drawing them, that your market data, I sometimes draw them very sloppy, right? But you want to make sure that markets are respecting your levels. So as we can see here, there's the 38.2, right? Markets are respecting that level. There's the, let's see, the 50 fib level, half or 50%. Markets are respecting that level. And then again, here's that 61.8, markets are respecting those levels. And the same thing with the markets above. markets are respecting this level. So when you draw Fibonacci, it's going to be very clear whether markets are respecting all those levels or not, right? It's going to be very, very clear cut. And if your markets are moving through those levels as if they're nothing, then more than likely those levels are wrong. Let's quickly have a look if we get that pop on US30. It'd be great to just get that pop through. Again, if we get that pop through the 23.6, that would be ideal. But again, I've got a very, very small stop loss here. I'm just going to tame that stop loss, pull it back to entry, because it is only 100 points or 100 pips, sorry, 1,000 points. So it's likely to be closed. But again, that's the name of the game. If you don't want to allow that thing to breathe, there we go. She's closed out. I'm going to go in another one very, very close to the current entry point. And I'm just going to hold this. I feel we could get a breakout to the top side. Looking at this dollar weakness, like it's, yeah. If we get a dollar break below that level there, we obviously are going to see a substantial amount of blood being shed in the market. We are currently trending. If we just dive in here a little bit closer, we are below this previous low, right? And if you see that previous wick was an attempt to push back up into that low, right? We failed that. And I think that's going to hold the dollar down this morning as we get closer and closer into that New York Stock Exchange. So remember, just a quick word of note, right? We are trading the GDP data for the euro. Sorry, tongue twisters. We are trading the GDP data at 12 o'clock. So we're going to start the show at 11:45. If you have a Globex 360 live account with more than $100, we are going to email you out that link and you can join us for that broadcast. So I'm interested in looking at GDP data. I'm interested to trade this week. We are going to be making some big money, some big trades, some big moves this week. So just a quick finalization and just letting you guys know about that. USD is still happy. ZAR obviously made a push down. We covered that earlier this morning. And GBP/USD is still making a play towards the downside. I think that dollar weakness, that pound weakness, apologies, will start to come into play. I generally read that the fundamental data that came out for the pound as generally negative. So that GBP/USD rise was purely based off dollar volumes, right? There was nothing to do with the pound in that rise. The pound I generally read as negative. That's my sentiment on it. And again, that's just my personal opinion. It's not factual. Okay, NASDAQ, let's see. So everything's currently sitting in a little bit of a state of limbo. And I generally get quite excited when we start to see these states of limbo. If I'm having a bad trading day, or I'm just not well rested, or I'm not feeling great, whatever the case may be, I don't enjoy these states of limbo. But when I've got extra energy, I enjoy it because we're about to see some sort of breakout, right? So when markets are kind of stuck in a zone, stuck in a bit of a channel, it means the next big move is on its way, especially a loaded move, especially when we've seen this massive dollar data drop or dollar index fall. We are essentially going to see something big pop out here. Someone is saying, Malebaka is saying, which pair is coming and to which direction? Yo. How does ZAR move more aggressive than gold? Yeah. So South African rand is just extremely volatile, right? Because if you look at these issues that we're seeing, both on the South African front and the dollar front, we've got two very, very, I would say, volatile economies at this stage, right? And that is why the trading we're going to see happen over the next quarter, specifically over next year, is going to be nothing like the trading that has happened over the past 2-3 years. It's going to be unlike anything we've ever seen, because what we're going to start to see is these economies that overlap, that have their own issues, that are going through their own cycle of recession. And we're going to start to see bailouts. We're going to start to see foreclosures. And I'm not speaking doom and gloom. I'm talking about a recession. A recession is a normal thing when there's been a state of growth for an extended period of time, whether it be the housing market, whether it be in an economy, whether it be in a business. Every business knows you're going to have a state of boom, you're going to have a state of growth, and then you're going to have a state of stagnation where you're going to need to cut back. You're going to need to develop and look at your cost structure and look at your efficiencies and look at your products. This is a normal cycle, even within life. Just in your personal life, you can see this. You've had states of growth, you've had states of challenging times, then you've had states of, things aren't just moving. You don't know why. But the reality is, everything that grows must come to a season of pause. If you look at Fibonacci, and for those of you who are interested in it, Fibonacci, and it doesn't matter, whether you look in the Bible, whether you look in the Quran, or you look at any ancient texts, right, where a commandment was given to construct something, it was always in the sequence of Fibonacci, right? For those of you who believe in Noah's Ark Noah's Ark was built in the Fibonacci sequence. All the measurements given were part of that Fibonacci sequence. If you look at Fibonacci and it looks at the retracement and the growth of something. So everything that grows, everything that expands, every impulse has to have a correction. And this is true for governments, this is true for markets, it's true for business, it's true for your personal life, and it's true in nature, right? It just is a thing, right? It's just something that exists out there. There's a deeper study on that. There's a deeper teaching on that. So if you want to get that, then obviously make sure stay tuned and hit that like button. Let's just see how the likes are going. Yeah, if you guys want to get that teaching, you got to smash the like button, because I'm seeing these likes. That's not the type of likes you want to see for life-changing teaching. So yeah, if you want to see that teaching, smash the like button, and I'll make sure if we get that like button over 100 likes, we will fast track that teaching. And for those of you interested, I see there's a lot of questions about Fibonacci, and it's a very in-depth teaching. It's one of my favorite teachings, actually, if anything. And it's around about 2 hours to cover the setup, the history, where it comes from, where it's going. So yeah, it's some beautiful stuff. Beautiful. Okay, guys. So we are seeing a little bit of a slowdown in the markets, and that's good. Markets were a little bit hot a few minutes ago. So we are seeing a little bit of a slowdown. GBUSD is made a little bit of recovery there. So that's decent. We should see the dollar starting to attempt to break the downside. Let's see, was I frozen or not? Let's see, what's the dollar up to? Yeah, so pound wants to break these highs, right? It seems like it definitely wants to. So definitely in line. If you're still in those buys from this morning, I mean, we are in about 30 odd pips with a profit, but nowhere close to what Euro USD's move was. Euro USD is currently sitting at 85 pips further to the top side. Euro USD is extending those gains. That Euro USD push, we can correlate towards dollar weakness. We can also then further correlate and look at that US 30 strength. So if you're on that US 30 buy, we've made a little bit of a spike to the channel. Not the type of spike I want to see. I'd like to see a full-bodied candle. I'd like to see that full-body candle close out within the next minute. So we look at our minute timer here, or clock. We want to see that candle close out as a full body on that next minute right there. So let's see if we get that. That could be the strength that we need to get that pop out to the top side. We are getting it. And depending where you've entered, you should be around about 200 points into profit right there. So I'm going to use that 200 points, and I'm going to say a 2,000 pip trailing stop, 2,000 points trailing stop. And should we push then into this next fib level, the 23.6, that should activate and then take that. What is the like button? Tell me. So yeah, if you're in full screen mode on your phone, if you turn your phone sideways back into like portrait mode, then you'll see there's a like button for the YouTube stream. And you can also subscribe, hit subscribe. There's also a little notification bell you can smash. We are busy doing an animation for you guys that will be able to play, and that basically shows you how to do it. But it's pretty straightforward stuff. If you're new to YouTube, then it is obviously a little bit difficult. Yeah, absolutely. Marsha Bart, thank you. Anybody wondering, that's my future wife right there. Beautiful human being. Okay, beautiful stuff. So we're just waiting for that breakout. We're not getting anything as yet. Let's have a look. Let's have a check on gold. So gold had pretty much some good growth this morning. And again, for the life of me, I can't tell where this dollar weakness came from. We knew the dollar's weak. Again, it's a continuation of what we said last week. That CPI data underwhelmed. Dollar took a massive spanking, and it's obviously looking at that, you know, it's a continuation of that fear for the dollar right now. But there has to be something more to it. There has to be a specific event, something that just adds value or adds reason behind that move there. I do want to have a look at that and what that ends up being, but I can't see it in the markets right now. So I can't see that at the moment. Let's just quickly have a look at Euro USD switching back. So definitely Euro USD failing to make any highs there. I can see US 30 is struggling here at the zone. But again, it's still within that range, which is perfectly fine. As long as we don't make a new low, perfectly fine. Range is perfectly good. I'm closer into entry in my current position, so we are good to go there. Oil on a good buy level. Let's just have a look at oil quickly. Alvin 4C saying oil at a good buy level. Let's just quickly give it a look here. Yeah, so Brent does seem to be at a good level of support, right? We are at that 61.8 fib level. I would like to see a little bit more market structure here, supporting oil. This is obviously a 4-hour time zone, so it's obviously massive. What I would like to see from oil is, some sort of breakup above this range. So what we're seeing here on a 30-minute, now a 15-minute, is some sort of symmetrical triangle. Even though that last move seems like it wanted to break above and it didn't, if we go down to a smaller time zone, I'll show you why that is. So if we have a look there, it's 15 minutes. Doesn't necessarily look super beautiful. If I drop down to a minute, you'll see what I'm saying. Okay, so you can see on a minute how this was a false move. See, markets actually stopped at that level, broke out above, broke down below, retest, and then started that fall, right? So that's obviously letting you know there. US30 making that new low. I'm taken out of that one. Let's just see what she does here. US30 is playing games this morning. I'm happy to get back in it. If it's only for 100 pips a time, I've got no problem. If it goes past my stop loss there, then you know what time it is. We are then going to start to look at that immediate sell stop. 33686. Let's get it. 33686. And I'll put stop loss back into structure. So 33700, 33700, and I'll use a trailing stop for that. If that ends up happening. Okay, what did I do wrong here? Sell stop. There we go. So if it breaks down, I'm going to smack it with a sell stop, and if it continues up, which is what I feel should end up happening here, dollar index is just busy retesting that low that it broke down below. So this weakness that we're seeing on US30 towards the downside is due to that dollar just trying to retest that level right there. But again, this massive sell-off here, I think it's gonna happen again. We're gonna see a continuation of the sell-off in this session. Hopefully, still, we still have a couple minutes to go, and we might run out of cameras here. But we still want to see that thing move into some deep profits. Euro USD still in a state of indecision. USD ZAR, we're not trading. We're looking for that closer move to that 61.8 Fibonacci level. Again, I'm just worried about selling this in case of, again, getting that insane strength. ZAR is obviously called the rattlesnake because it does exactly the opposite of the market, right? South African Rand is probably the only currency I've ever seen in my trading career where unemployment can go up, where we can see crime and, all these crazy things, corruption just go through the roof. We can see insane things, our GDP decrease, and yet the South African Rand can get stronger. So right, that's why it's called a rattlesnake, because the second it's facing the opposite direction, you think you can grab it by the tail, it'll turn around and spike you. So yeah, with USD ZAR, I've learned to build a healthy relationship. I need all the boxes to be checked. I need it to be in a structure. I need it to be on support, resistance. I need it to have a lot more things going and just rising or falling, right? For me, in past data, it's just proven that that rattlesnake snake is just something else. Amos saying, Amos John saying, gold aiming for a 799 for a sell. Let's give it a look. Let's give it a look. Let's give it a look where gold is at. Yeah, so remember, Levin's saying welcome to SA. So I wouldn't consider gold a sell, and that's just purely because if you look at this bull move, right, we need a little bit of correction here, which we're getting, right? There's obviously this dollar trying to retest, but the second this dollar retest fails, and if this thing falls through the floor, right, remember, this move just happened, the same move could happen again, right? And if that happens, then gold will again make another big upthrust to the top side. So the only way I would look at selling gold, the only way I'd look at selling US30, which looks like it's pushing into a negative on my side, the only way I'd look at a sell here would be if the dollar index makes a move past that level there. Going on to a 1 minute time frame, you can see again, markets are literally consolidating, trying to make sense of that move. So should we go past that, should we break that little previous attempt into resistance, then I would start to look at selling gold, selling US30, whatever the case may be. But until that happens, we could very likely see another big move or thrust towards the downside on that dollar. There is a little bit of price action, but it is janky, I won't lie. I'm not going to try and justify this. I'm not going to try and tell you this is good. This is good charting, because it's not. but we may, end up getting some data that shows us what this dollar is trying to do or where this is trying to go to. I think the best example here would be, even that is not a great justification. But I mean, long term, we could see the dollar doing something like that, right? So, there's the spike. I know this is an hourly time frame, makes that spike look minuscule. But over time, we could end up seeing, a spike further down, but we could see some sort of retest that aligns with some sort of fib level. So we could see some sort of deeper retest, a pullback to the 61.8 over some period of time, and then a continuation to the downside. So I think the deciding factor right now for the dollar, if we're getting these ranges, it's not a problem at all. If we get a US30 breakdown, which is happening there, I've got a sell trade there that has engaged, even though it pushed and activated, looked like way later. It was very strange to see there. Even though that sell is there, even though that sell is there, I'm going to look at a trailing here of potentially 2,000, maybe 3,000, in case that breakdown is substantial. But again, I'm pretty happy to, if I don't get in on any of these range moves, which is not the moves that I like, I'm pretty happy to take my loss and look for that direction when we get that PPI data release at 3:30 this afternoon. So remember, we've got the 12 o'clock the euro gross domestic product GDP coming out at 12. We then have at 3:30 the US PPI, and then we have the New York Stock Exchange. So again, there's going to be a lot of dollar opportunities today. The dollar has set the tone this morning for this weakness, and essentially all we're doing is we're going to be fishing out. We're seeing a dollar pretty much walking around a limping leg at this point. The leg was shot. The dollar shot itself in the foot last week Thursday. We're seeing more signs of weakness. We're seeing some blood dripping, some trails here. If we get that weaker than expected PPI in line with what we saw in the CPI, that could be the final blow for the dollar, right? That might set the tone. And again, if the dollar goes under such scrutiny and goes under a period of nobody knows what's happening, that's going to be nuts, right? So that's going to be, we've never seen something like this, right? Where the whole world is clinging onto the dollar. We've seen over all these past interest rates, the world has clung onto the dollar like nothing else we've seen before. The past 20 recessionary periods, every time the interest rate has increased, right, we've seen the dollar fall, we've seen stock markets gain in value. We're not seeing that right now, right? Just having a look at this dollar index behind me, we're starting to see a little bit of that sell-off movement, and it's probably at the time where, there we go. So we're starting to get that sell-off movement. It activated my sell stop, but again, I would have only liked to have sold US30, as I said, if we broke through resistance, but unfortunately, my penny order was just sitting there and it just said, hey, good morning. It's what it is. But in any event, we're seeing unprecedented times, right, where interest rate increased, the dollar got stronger, stock markets fell. And now if the dollar starts to fall, stock markets are going to rally unlike anything else. We're going to see a further disconnect between Wall Street and Main Street. And again, the more than 90% of the world's transactions happen in the dollar already. So again, we are living in unprecedented times, and we will see unprecedented trade opportunities that we will obviously have to adapt and adjust ourselves for in the coming days, if not coming weeks and or months. It's going to be pretty important. Okay, so let's see. Let's just do a quick roundup and summary of where we're at. EURUSD still looks like it wants to continue. GBPUSD still looks like it wants to continue. US30 is lingering, but I suspect this is temporary. I still believe in a long move here. We're still floating on that 61.8. And dollar index is struggling here. Dollar index, again, like I just said, if the dollar index starts to break here, I will rather start looking at a bigger long on US30. I'm already in a Euro USD long, but if it starts to break here, again, you're just going to deal with price action today. That's what it's about. We've had the fundamental. We obviously just need to deal with price action. I would say if dollar index breaks, start to look for GBP/USD longs above, this level that we've pretty much sitting on at this moment in time. And again, dollar breaks downside, look for longs on indices. Same thing on gold. Dollar breaks downside. The same impulse we've seen on gold gold pretty much broke up for about 120 pips. The next 120 pip move can happen. The only thing I'm not sure about on gold from a fib perspective, I don't believe this is the real fib level, right? If I look at these levels, they're lining up, but they don't look great. I suspect the real fib level is going to be something like that, right? Looking at the last impulse, not the total swing up, total swing down, and it just comes over time from looking at the market. So if we don't find supports across the board at 61.8, we may then have to look at those supports from a 78.6 perspective. But again, we will deal with those markets when we get into that PPI release that is obviously coming out at 3:30. Wherever the markets are then at that time is what we will deal with, and vice versa. You know, if markets are still stuck at 61.8, we get that lower than expected PPI, it will fuel a dollar fall and fuel a indice rally, as well as commodities, as well as currency, where the dollar is the quote currency, right? At the moment, Euro USD, the dollar is that quote currency. So that's what I think we're going to deal with today. We're going to deal with the shows a little bit differently. When markets are ranging and not giving us opportunities, that's where we go ahead and find it. So I'm super keen to be trading this week, regardless if we're getting the data or we're not getting the data. We're going to do some insane shows over the course of this week, right? Regardless of what it takes, we're going to catch those pips, we're going to catch those bigger moves. And regardless, if the markets want to give it to us, fine, great stuff. If they don't want to give it to us, we'll take it. We'll go and find the opportunities and we'll take it. And part of getting those opportunities, being prepared and showing up. Showing up is 90% of the work, right? You can't catch an opportunity if you're not showing up. So if you want to be part and parcel of that, make sure you have a Globex 360 live account with a minimum of $100. When I say $100, that is the minimum. It's not the recommended amount. I do recommend, at least $1,000 or more, personally speaking. But again, it's subject to your own financial position or what you can and cannot afford. If you want to be part of that, you are then doing 90% of the work. You're showing up. Remember, these broadcasts come to you completely free. There are programs out there. There are education systems out there. I won't mention names, where you pay 30, 40, 50,000 Rand. You finance that over a period of years to not even get 10%, not even 1% of what we do in these broadcasts. So again, you want to get the full value absolutely free. All you got to do is have a Globex 360 live account to come and join and benefit. So again, 12 o'clock I will be live, 11:45 for those of you who have your dollar accounts, and then again 3:30 again 4:15. So outside of that, we're going to allow the markets to settle into wherever it is they want to go. We're not seeing any directional volume at the moment. Pretty much stuck in a little bit of ranges across the board from what I can see. I'm just doing a quick scan, see if anything changed. Not much. US30 might be chasing that 78.6, that fib level. And maybe just a last note, just to confirm here. If we see a continued push down, I personally wouldn't chase it now. Looking at where we are from a dollar index perspective, right? We need to push through here. If we do, great. If we rise up above this level, great, 100%. But if we don't, I think the next level to start to look for opportunities is going to be at this 88.2. You might find we might correlate with this 88.2 somewhere around about here. And this is where I would start to consider some long positions, meaning we've had a big impulse. We can identify an impulse from a correction. We can see there's a correction. It's a little bit of a sideways market. A correction down to a known, the deepest fib level we can correct to without being a new impulse is the 88.2. So I might consider looking at this zone for a long position, and we will then consider that. If we continue to get an entry here and a dollar weakness, that is a perfect storm situation. And that's what we will potentially look for. Yeah, dollar waking up again, but I just don't think it's enough at the moment, right? There's blood in the water on the dollar. Should we get above the zone? So should we get above, that market low? I'll give the dollar credit where credit's due, but we need to break that low to consider anything on any sort of dollar strength basis. So we obviously want to continue to watch that and monitor. And I think I've said enough times what you should do should you come into those events. So we have just about an hour and a bit before that 12 o'clock data release. I'll be live in just over an hour from now for that Euro GDP data release. We're going to get a big release at some point of today, whether it's the GDP data for the Euro, whether it is the PPI event for the US session starting at 3:30, whether it is New York Stock Exchange that takes in all this data and starts to run. We're going to find that run. I can guarantee you that at least. And until we get that, guys, have yourselves an amazing amazing morning, right? As always, be safe, trade safe. You guys know the Globex 360 way. Hit the like button, hit the subscribe button, go ahead and share with someone who needs to see this information. And outside of that, just know you guys are hugely appreciated. We know that, you know, some of these broadcasts may be free, but you pay with something a lot more valuable than money, and that's your time. So just thank you for investing the time, both in the markets and in yourselves, in being with us and part and parcel of these amazing sessions. So guys, massive thank you from my side. As always, much love. For those of you who are Globex 360 live account clients, I will see you guys just over an hour from now. Remember, big day ahead, big week ahead. Let's stay positive. Let's make sure we end the week in the green. Guys, as always, much love. I'll see you guys a little bit later. Goodbye.